Welcome to the Bitcoin Crypto Daily News podcast for Friday, May 9th, 2026. Today, markets are on edge as Bitcoin tumbles below $80,000 after U.S. airstrikes in Iran send oil prices spiking, triggering massive liquidations and a risk-off mood across the crypto landscape. We'll break down what this means for you, the pressure building up in derivatives markets, and the latest real-world adoption metrics that could shape the next bull run. First up, the big story. Bitcoin retreated sharply overnight, falling under 80,000 after renewed U.S.-Iran tensions pushed oil briefly over $100 a barrel. That move triggered nearly $300 million in long futures liquidations, mostly investors who were betting on prices to keep climbing. Open interest in Bitcoin and Ether futures is down, options traders are piling into downside protection with puts, and the market's 30-day volatility is at its lowest since January. The key takeaway? After months of rallying, the mood has shifted to caution. Traders are deleveraging ahead of the U.S. jobs report, and a sustained drop below 75,000 could threaten the uptrend. Next, let's talk about stablecoin adoption. According to Rain, a payments platform, stablecoin card spending, using tokens like USDC and Tether for everyday purchases, has doubled year over year. In Latin America, stablecoin cards could soon account for double-digit market share as companies like Rain and MasterCard enable on-chain settlement. Although stablecoins still make up less than 1% of all card spending worldwide, the back-end benefits are becoming clear: faster settlements, reduced capital needs, and flexibility for merchants. For crypto users, the big advantage is being able to spend digital assets almost anywhere, with familiar card protections. And finally, moving into DeFi and protocol security. Arbitrum's governance community gave strong support for a $71 million Ether recovery plan following last month's exploit linked to North Korea's Lazarus Group. The proposal aims to return frozen funds to impacted users, but faces ongoing legal battles in U.S. federal court over ownership. Even if the plan passes on-chain, withdrawals will be delayed, giving courts time to intervene. The incident has already pushed DeFi protocols to tighten risk assessments beyond just finance, now including cybersecurity and technical audits for collateral. To recap, today's market is defined by global risk events, loan liquidations, and a shift towards safer trading strategies. Stablecoin payments are breaking into mainstream retail, and DeFi platforms are grappling with legal and technical challenges after unprecedented hacks. To stay ahead of the curve, subscribe for daily updates and check out our latest analysis at our podcast blog, link in the episode description. Thanks for tuning in to Bitcoin Crypto Daily News. See you tomorrow.